Hey, Andy, Jamie, what's up?
Hey Scott. Hey Scott, thank you very much. Hello Jamie.
Hello, Andy. Greetings to everybody out there. Happy Thursday.
Yeah, we got a good crowd. Looks like an even split of subscribers and non-subscribers. So that's great. We love to see that. We'll have stuff for both of you. Don't worry. And thank you for so much for attending. This is the Trading Studio. I'm Andy. And the disclaimer first is that we are content publishers. Okay, this is for education. Not here to sell you anything. Okay, if you're looking for advice as far as investment goes, you should look for somebody who is licensed, like a RIA or a stockbroker. All right, let me go over the 5-star support, education, and training that midnight on Friday night. Um, so anyway, I want you to be aware that there are education and training resources for you. I'd like to point out our YouTube. Just go to YouTube and look up Trade-Ideas, and you will find lots and lots of emails. I would recommend you go to the playlist. That's where you're going to find a lot of the support emails. And also, we have webinars. We're going to have a little bit different schedule for next week. You will get an invite. Okay, if you signed up for the test drive, you'll get an invite to these help webinars every morning. So be sure you attend those. Will be a great place to go for a lot of your needs. And then also the traders room, don't forget about that. Okay, Barry is really good about after the first hour and a half, 2 hours of the day. He is there for your assistance. In other words, if you have questions, he doesn't mind you asking. Now there will be a lot of people in there for the test drive, so you be patient and he'll get to you. But I would recommend, come to the support sessions first. Next week we won't have our afternoon webinars that you see. We're going to devote that time in the morning for helping you guys out. But normally Monday through Thursday, every 5 o'clock, we do have a webinar. It's usually myself, Jamie, or Steve, kind of juggling those responsibilities, paired up. But Wednesday, we do give you Dan Merkin, our CEO, and Brad Williams, our CTO. That's a good place to come for Q&A as well. And Friday support session this week, okay, I'm not sure if it's going to be the 1 hour version or the 2 hour version. I think it's going to be the 2 hour version, but anyway, it will stay in there as long as you have questions coming. Don't worry about that. And that is going to be Friday at 11 Eastern time. And you do need to sign up for those as well. All right, TI University. We do have TI University, guys. I'm here soon. We're going to start. We need more. And they come to us all the time wanting to talk to one of us in recordings. These will always be available for you, but we're going to start something where each morning we're going to be paired up in twos and doing kind of a Q&A for anybody who wants to come with questions. I think this is going to be a much better format. So in other words, if you have a question in the morning, there's going to be a set time for you to come in and ask us. We haven't decided yet. I think on that, Scott will be on top of that and get it to you. But anyway, TI University will always be available, and it's going to be recorded 4 hour sessions, 4 1 hour sessions, I should say. So be sure you do watch those. I would highly recommend that as well. And now the paper trader. We have a paper trader here at Trade Ideas, okay? And I think it would behoove yourself to, if you're coming for the test drive, to get familiar with this paper. Probably need to change the name in here, but it's a great way for you to just come on our software, not have to worry about connecting with a broker, not have to worry about funding an account. You can paper trade on our software. And so many people get into the trading business thinking it's fast money, and they dive right in with live money, and they get ran out pretty quick. Okay, you need to treat this like a business. Okay, and any business you go into, you're going to be trained for some time, and you need to do that with trading as well, and probably more. So we're trying to show people that on our software, you can come in, spend several months learning, how to trade, what to trade. Trade Ideas will help you immensely on what to trade. So we're really going to be pushing this because we've all been trading for a very long time, all the traders here, and we know what it's like during the first 6 months to a year. And we're trying to show people that, hey, you need to come in and give it some time and learn without wasting all your money. So anyway, we'll talk more about that in the future for sure. The agenda for today. Okay, we're going to do the market recap. Boy, incredible rally off lows today. We'll talk about that and what it may mean for the days ahead. Holly recap. Jamie will take the reins at that point and go over any of the Holly calls we need to go over, the alerts. And then, as you probably saw in your subject line of your email that you got for this webinar, I'm going to show you my swing trading layout. I'm going to go over each window for you and just kind of tell you what I look for in these windows. And not only that, I'm going to share this layout for anybody who wants it. If you're here and you're going to be on the test drive and you don't have access to the software, don't worry, you can always hit me up and I will share it with you. Just send it request to info@trade-ideas.com. You'll be getting emails, so letting you know that that's the place to send your questions. But anyway, hit me up and I will definitely share this with you if you don't have access to the software right now. And then Steve touched on this on Tuesday, but for those who may not have been at the Tuesday webinar, and I'm sure there were quite a few that probably weren't, I'm going to show you our new little feature, Anchored VWAP. Really cool little feature, kind of designed by and for Alpha Trends, Brian Shannon. So anyway, I'm going to show you how that little baby works, and you will have access to this if you're taking the test drive, you'll have access of this little feature. So you'll have all the bells and whistles, in other words. All right, let me back out and pull up the spies here. Pull up the spies, I called it, the spy. And wow, let's take a look and see what we had here. I mean, it looks like we've been in for about 4 months now, and the spot closed right below that, and then we were this channel. If I could draw it further here, there you have it. So we're right at this top part in after hours. We got a little gap up here in after hours. Amazon had some really good numbers, got to a decent gap up in the market. COVID, the coronavirus, but what can happen? I think we still have to deal if we do gap up and try to run in the morning. We got this 10-period moving average, I think, that we have to deal with. And I'm going to show you real quick the anchored VWAP. Let me just click on this anchor right here, and I'm going to go back to the close on. Let's go to the, what is this? The first? Nah, I'm on the wrong month. Okay, let's go to the first of, that's what would be the second. So let's go to the close on December 31st, and it should pull up the VWAP, and you can see it. That's that little purple line here. It looks like we may have just gotten right above it there at the day. Just kind of wanted to show that with you. I'll show you some more later on some other charts. It's kind of I have a chart that doesn't have any moving averages in it, and it won't be so convoluted when you're looking at it. So. But anyway, I think tomorrow, yeah, you got to look at this high yesterday, and then keep an eye on this as far as the spies go, this 10-period moving average, to see if we can get back above that and then get back in this channel. That would be, I think, promising for the bulls. If we run into this level and things start to get a little shaky and roll back over, we could, it's one of those kind of things. It's been a buy the dip market for years now. We all know that, guys. But I think you also, you still have to be careful, because at some point the major pullback is coming. When we don't know when that's happened. I was actually short going into today. I've been short from up here, so I'm not in trouble. But it's one of those kind of things. I'm not real confident in it right now. But at the same time, I will not be loading up the boat long tomorrow. Okay, I want to see the price action and what's happening. We still have a little damage done here, and see if we can get back above this 10-period moving average, in which we spent so much time above, over the last 4 or 5 months. All right, let's take a look at the Qs. I think that's probably been the leader still. And yes, you can see they actually closed today above their moving average, probably thanks to the likes of Apple, been holding up well. And of course, Facebook probably hurt it a little bit, but yeah, Amazon's probably going to get this, has a huge impact on the Qs, a big percentage portion of that. So that's going to have an influence on the Qs tomorrow as well. As you can see, they're up here in after hours. You can see at 224, we're not far from an all-time high that quickly, back in the Qs. All right, IWM has been the dog still lately, and that one is not looking anything really. It did fight back today, closed near highs, but right below its 50-period moving average. Once again, this one is definitely still having a hard time catching up with the others. We can go back here and look at a all-time. We still haven't gotten to the all-time highs on the IWM. So still the lagging dog there in IWM for sure. Might want to keep an eye on that. But that's about it, Jamie. Anything that you want to add to the overall market recap?
Not really. You summed it up pretty well. The mob mentality is fickle, right? I think everybody and their dog thought that the visit down to the 50-period moving average was a foregone conclusion, and didn't happen today. I thought, once we were down there at the lower extremes of today, I thought, I was like, well, yep, just yesterday was a little digestive, but today is the day. But wasn't correct on that, and just like you, got some nice short positions, but not in trouble, but not doing quite as well as I had hoped they would, and of course a few longs too. What's really amazing to me are all of these stocks that are still hitting all-time highs, and there were a lot of stocks out there that did not participate in the downside. So we got to take that information for what it's worth, and would it have been healthy to go down there and tap that 50 period? I think so, because the market needs a little bit of a pullback so that it can go attack the new highs again. That's just part and parcel for any instrument or any group of stocks. But the market's a little fickle right now, as you were talking about earlier. It's not every day that China locks down 40 million people, puts them on quarantine. So there's just a lot of what could we say here? FUD is the best term: fear, uncertainty, and doubt. And with what's going on with the coronavirus, that always, it reminds me of several other epidemic type things. Everybody remembers when we had SARS and all that stuff. So we'll just have to let everything digest and see what happens. But all in all, the market still feels very resilient at these levels.
For sure, Jamie. A couple of times a day on the intraday, and the morning, that was a beautiful looking horseshoe. If you're a bearish, I should say an upside down horseshoe. We had this action right here, went to lows, and I'm in the same camp with you. I thought a visit down here to this support level and the 50-period moving average was going to be in play, if not today, probably tomorrow. And it didn't happen on that one. Then I saw it again, thought maybe then, and then wow. And there's your resiliency of this market, and it's just it's been this way for a long time. Of course, you do have the Fed at your back. Once again, I shouldn't say once again, they never left, but so that, I don't try to figure out what's going to play an impact and what's not. It's easy to get caught up in the news because you read all about this coronavirus, but in the grand scheme of things, the number of people infected right now is just really, really small. That doesn't mean it can't get out of control, but no reason to sell the farm, or
yeah, and everybody just kind of blew off the non-action by the Fed yesterday. I mean, if you're like, I think I probably speak for a lot of people out there, you just kind of blew it off, right? Well, there was no lowering, right, which is unheard of in an up market like we're seeing now. Remember back in the day with Alan Greenspan and the irrational exuberance, what did they do? They kept tightening the rates. They started raising them, and that taps the market back down and controls everything. Well, they've been lowering rates as of late, and no change on this last thing, but that's still very bullish for the markets. When you're keeping those rates down, you're not
Sure.
raising rates. That's good for the market. So we all have to factor that into the scenario here, and thus far it's still very, very resilient, to say the least.
Yep. Yep. Absolutely. Absolutely. All right, Jamie. Well, do you want to take it over and talk a little bit about Holly? I know there's not a whole lot of
yeah, I'll grab it here, and you hit
excitement.
you said the key word there. Talk a little bit about Holly.
Yeah. Yeah.
And the reason we're chuckling and laughing about that is because if we look at the channel bar over here, we can see all the modules. The AI did kick out 20 signals today, but when you tally all the totals up over here, we got 24 to the negative over here, 44, so we'll just call it 4. We're up at like 20 something bucks as a whole on 20 trades, which we could call flat to down a smidge, especially if you're paying this thing called commissions still. But when you factor in slippage, we could just write it off to flat or down slightly. When I expose the full blotter here, you'll see, if we're just playing the color game in moderate profit, which, basically conservative here, conservative here, conservative here. All the modules finished in conservative mode, and when I resort, we still get about the equal amount. It's pretty split down the middle here, equal green, equal red. So just kind of a non-event day for the AI. A lot of, well, let's see here, 1, 2, 3, 4, 5, 6, 7, 8, 9. Barely a positive bias or a long bias, looks like 11 versus 9. But you can see here, usually we're biased one way or the other a lot more than a +1 on the long side. So, the AI was having a hard time making sense of all this action that we've had as of late, as we just churn around in this level right here. So market direction, anything but easy to play here lately. It's never easy, but it's never, the difficulty level is definitely turned up a couple of notches here when it comes to just market direction. And the AI's performance today kind of reflects, the same uncertainty or, perception of the market versus what really happened in the market. Everybody was right today and cheering, and then all of a sudden they were wrong, that quickly, in any case, when we're talking about interacting with Holly, no big, huge winners today. We did have a couple of, almost a 3%er and a 1%er. We've been seeing some 5s and 8s and everything on a daily basis here, but not today. So usually what we do is like to talk about extracting some of the conservative versus moderate profit spread here. But in order to do that, we have to have some juicy numbers over here and maybe some premature exits or timed out exits here, so that we do see a spread between conservative and moderate. Well, quickly perusing this list here, you can see, because everything finished in conservative mode, these are the better performing data sets today. So with the exception of AGX, there really is no conservative profit spread versus moderate spread to think of, to speak of, because there just wasn't a whole lot of follow through in these trades today, whether they were long or short, And when you think about that little run that the market had at the close today, which carried a lot of stocks with it, you would think that the longs would have performed a little bit better, but that was not the case today. So it's going to be very interesting tomorrow to see, are we going to maintain this green, or are we going to go fulfill that 50 period, or are we just going to kind of chop around a little bit? But we've all got front row seats. So the only stock where any risk off, or excuse me, a conservative versus moderate spread was this little play right here in AGX. And, look at that signal there, Andy, and then the little gap down right after it. Of course, that's not like what we like to see typically. It'd be better if it was the other way. But the bottom line is, right after this signal at 43.11, in the next 15-minute candle, we were already barking at 40, almost, 42.95, almost triggered the stop. If I squish that up a little bit, we can actually see the line there. But, no stop out occurred, got about not quite halfway down there. And then, let's see, entry candle here, 1, 2, 3, stayed in the trade for 45 minutes before Holly got a little gun shy and reduced the risk here and took her loser right here. Now, said this a million times, I'll say it again, Holly's not the best at exits. We are trying to we're in the process right now of trying to improve and make the exits a little bit better. But whether we can achieve that or not remains to be seen. We all know that the real strong suit of Holly are the statistically weighted entries. Now, a nasty little move here, but no stop out. What do we have right here? Or this derivative hold time there. So once again, using some of Holly's exit signals as entry signals here, whether we stayed in the trade and saw this wick put in down halfway to the stop loss area, or we could have added to the position right about here, because once this wick gets put in and we get these little stable candles moving sideways here, that's typically a good sign. All right, means sellers tried to take control, couldn't get it down there, snapped it back up. We get some sideways action here. So whether you're in the initial position right here, sitting a little bit of a wiggle and staying in it for the duration, sticking to that stop loss, or whether you chose to add to the position down here, because a lot of the times when Holly makes these premature exits, there's a possibility to get a better price than Holly, and it's clearly illustrated down here. So even seeing Holly reduce risk, which I urge everybody to watch the exit signals and see what's happening on the intraday, a great time to even make an entry here based on the exit position and getting to 43.02 or somewhere in the $43 area, 10-cent better price than Holly, to see the trade finally get a little friction here and reclaim that 10 period before making a nice move into the close. All while doing very low risk. You know, if you saw original stop loss, you're risking less, or even getting a little bit more aggressive and using the bottom of that wick as a stop loss there. You can really minimize your risk and leverage some of these positions sometimes, because keep in mind, this statistical probability that Holly kicks out is good for the day. Sometimes they go immediately, sometimes we have to sit a little pace, then Holly. Perfect case in AGX today, and happens to be the only scenario here where we were able to extract a significant spread here. So that's a little over a point with negative 36 and 86. We did have some small, let's see, I think we did, or did we not? Yeah, a real small one here, not even really worth showcasing. So really the only good opportunity or example today was AGX as far as that conservative profit and moderate profit. So Andy, without further ado, I know you got a lot of good stuff here, so I'm gonna push it back to you.
Sounds good, Jamie. All right, guys. Yeah, Chris already downloaded. So the version that I was just showing you right there with the anchored VWAP, you have access to right now. It came out today, so you can go online to our site, trade-ideas.com, and click on it's on the main page, download software, and look for the production version 0.31. What is it, Jamie? 131. Sorry, 131.
Right, that is the latest production version, and there is no beta. You know, sometimes there's a beta, but there's not right now. It's just the 131.
And Javier asked, does Holly work for day trading? Yes, it does. And right now, ever since the inception, that's what we've been calculating as a day trade, because Holly gets out of every one of her entries by the end of the day. Okay, that doesn't mean you cannot take these as a swing trade, but as far as our keeping her performance, it's based on a day trade. So yes, to answer your question, sure, you can, for sure. All right. So what you guys are looking at is my swing trading layout that I put together. Now, I do have my normal layout, but I will migrate back and forth if I am looking for some swing setups. This is the layout that I like to use when I'm doing that. And what I'm going to do today is just kind of explain to you each window that I have in here, and then what I'm also going to share it. I'm going to share this layout to anybody who may want it. So a lot of these, if you guys have been regulars on here, you've seen them before, so it's not going to be anything new to you. But there's a lot of new people in here, and a lot of people that's going to be coming and taking the test drive. So I kind of want to go through it, each one of these windows real quick, and kind of explain what we're looking for, what I'm looking for when I'm looking at these. You're going to see most of them are alerts. I do have a top list over there in the far left called pullback above 50 SMA Pro. Now, what this is, I'm not going to go really and get into the exact filter sets. I'm just going to kind of explain it to you. When I share this with you, obviously you can go in there, right click, and look at the filters to see what I use to construct these real easily, and it will make more sense to you then. But it would take too much time to basically dissect each one of these and explain to you all the filter sets in them. It's well, not that complicated, but it's time consuming. So this is a top list, and basically what it's looking for stocks that have a constructive chart pattern over the last 3 months, let's say. And the reason I know that is because one of the filters in here, it has to be above the 50-period moving average. Okay. Obviously, if the price is above the 50-period moving average, we know that it's going to, at least over the last 50 days, it's going to have a nice low, or be sloping from the lower left to upper right. I shouldn't say it's going to be a nice slope. It could be a small slope as well too. But nonetheless, we know it's doing what we want to as far as a bullish pattern goes over the last 3 months. Okay. So I also want the stock pulling back over the last 5 days. I had a filter that I can use to make sure it's pulling back over the last 5 days in the lower portion of its 5-day time frame. But today it had to put in what's called a bullish setup candle. Okay, and it had to close in the upper 25% of its intraday range. So if you look at, when you see a lot of these patterns like this meat right here, okay, this is what I'm looking for. Here's the 50, the blue line down here, okay? If I scale back, you're going to see over the last 3 months, lower left to upper right, nice little pattern there, but it's pulled back in the 5-day time frame. And it's put in a bullish candlestick. So this can be a great little top list to do your nightly homework with. Because I have it set for time frame live during market hours, that means it's going to shut down after the bell rings and leave all these symbols frozen in here. So you can come in here at night and do your homework. Say you look at something like this meat right here and you say, wow, that looks good. You know, if this thing, the theory behind this strategy is if it takes out tomorrow's high. So let me just go ahead and put a price alert right here. Okay, so now I know if it takes out tomorrow's high, which is a good chance it's going to do it, if we have a gap up, theoretically, I buy it, okay, using the low of this bar as my stop. Now, under conditions like we might have tomorrow, I'm careful with this. I probably won't do anything in the first 15 or 20 minutes because I know it's going to be a gap up, and these things could, you know, gap up, and I'm not just going to rush up and chase a gap. But, you know, there doesn't mean there's not some good setups in here. Let's take a look around, see if we can find a few more here to get the patterns we're looking for. That one's kind of sloppy. A lot of gaps. Looks like it's trading almost like a. So you'll find some. Let's look at this CERN down here. That's a pretty good one there. Okay. And also have a composite rating score in here. Okay, so you can sort these by the composite rating. You can sort these by the change from the open, which one was stronger today. So you can do a lot of things with this where you can examine different parameters. But what I was looking at CERN, there's a good example of one. Look at that. It fell below the 50 today, but since it closed back above the 50, it's appearing in here, and there is your, 3-month pattern. Nice little slope there. Once again, if it takes out this one, there's a good chance you might get a nice 3 or 4 day move out of this thing. So anyway, this is a great little one for doing your homework with. Okay. Now you can see the rest of these I have history on just because I left this and I came back into it later in the day, and it didn't have a lot of data in here, so I had to put it on history. Don't worry, when I share it with you, I already have it saved in here, so it's gonna be in real time there for you. Let's Go Fishing is one that I've been using for a long time. It was one of my, I shouldn't say one of my first alerts, but it's been around for a long time. And this is basically just looking for stocks that have been beaten up on a yearly time frame. You can see this is kind of ugly downtrend. But over the last 20 days, it's starting to show signs. Well, really, it was mostly today. And you can see that it had earnings this morning in pre-market. So this was an earnings play that came through. Let's see, it first came through at 25.96. So yeah, right around there. It got to the upper portion of its 10-day range. And that's what I'm looking for. Stocks that have been beaten up, but over the last 10 days, they're starting to show signs of turning around. And there's some fundamental metrics in here as well. You can take a look at them when you get access to it. So that's the only stock that came through this one today. So maybe one to take a look at. Nice volume off of earnings, maybe turning around. All right, extreme volume, high-low pro. This is probably my favorite alert of all time. It's basically just finding stocks that are doing, huge volume. That was a head fake today. That are doing huge volume. They have to be doing at least 5 times normal 5-minute volume, at least 1,000 times 1-minute volume. So this is, a lot of people would think this is a momentum trade, but let me show you something. This is a great example of why you don't discount momentum trades as swing trades. Okay, look at this Mondelez this morning. Gapped up on a horrific gap down in the market. This one gapped up, huge volume, broke through a all-time high. Look at that, on huge volume, and look at this follow through all day long. And this is a stock. When you see things like this, you may come back a week later and this thing will be trading at $75. Okay, what I'm saying is don't discount momentum alerts as only day trading vehicles. These can be great for swing trades. A lot of your big moves come with a day like this to begin with, and then they'll just keep kind of chopping and just going higher. So that's a good example of one. And this also has downside, which you can see, the yellow are going to be stocks moving down on huge volume. The green, they have to be up at least 1% to be in here, to appear in this window. The yellow, they have to be down at least 1% to pull in this, appear in this window. So this one's a great, can be a great little alert for swing trading as well as momentum trading. All right. Now this one right here is called pullback above 50, same as we have over here in the T window. What I did is I created this A window, all right, out of this T window. So I just converted it into an A window. So if I don't do my homework very good, I can still come in here and find some nice little setups that are happening in real time as they're hitting a new high. Now this is one, once again, early in the morning. This is why I say, guys, when I'm trading these setups like this, I don't go chasing in the first 15 minutes, okay? I may miss something, but I'm going to, give this some time to work through. That's a gold play. I don't trade much gold. Leave that for Steve. But anyway, this can be, it's basically the same as this pullback, except it's alerting you. It's alerting you in real time. And that one's kind of funky there. It was kind of low volume. There's a nice one there that happened kind of in real time. You've had a nice pullback above the 50-day moving average, and then finally it did a bar reversal right there, General Mills. All right. Now this one right here is just the opposite. This one flipped. So what it can do is find you stocks. If you're looking to go short, maybe you come in and you typically are one that likes to go long, okay? But there's going to be a day when the market conditions are not going to be like they've been in the last 11 or 12 years, and it's going to benefit you if you can have a backhand, okay? So this is when you can pull something like this. This is the exact opposite. If you look at this Boeing right here, it's looking for stocks that are in a downtrend, right? The last 3 months, they're below their 50-day moving average. Excuse me. And they're doing a reversal. Excuse me, I'll get a drink of water real quick. They're doing a reversal pattern to the downside. Now, the market grabbed this. It looked like it was going to work today, and then the market grabbed it and pulled it up. And you're going to probably find a lot of traps setting this one today, just because this one, once again, was working until the market grabbed a lot of things. So that's the thing about it. It's been hard shorting lately. That's for sure. Once again, this one was working, and then market got a hold of it. But like I said, guys, there's going to be a day, okay, where the buy the dip is not going to work, okay? And this is when, you know, you could put something like this into play. Well, you may be asking me, say, well, Andy, what do we look for when that day comes? Well, what I would probably look for is maybe when the spiders, you know, do get below a 50-period moving average, along with the rest of the market. Then what happens is when you get in kind of a bearish tape and you get these bounces, all right, and the market is weak too, you have a lot less people willing to come into the market and buy the dip. Okay, so I know for many of you, you probably have never even have seen a bear market. Trust me, Jamie and I, we've been through 2 brutal ones. They can be very nasty, and if you really want to, you know, maximize your talents as a trader, you know, it's nice to have the ability to be able to short sell. But unfortunately, probably today, you're going to see a lot of them that have failed because, once again, this one was working nicely and then it kind of bounced up. The market, although that would still be in the, or pretty much flat right there. All right, so that is the bounce below 50 SMA. And Jamie, if I need to elaborate on anything, you got questions coming in over there, I'll stop and be happy to.
Yeah, I will say this real quick. Uriel was asking, would you please show what I have to do on the alert to be able to enter the trade at the first 1 to 5 minutes of the open, I'm assuming. So you care to wax a little bit about?
Is he talking about on one of my alerts or just anything?
Right. So, you know, I mean, my 2 cents is, you know, the pattern forms when the pattern forms. Well, you know, if that is in the first 5 minutes,
right,
great. However, we know how frantic prices can vacillate in the opening 5 minutes. So, you know, the old saying is you can make a lot of money in the first 5 minutes or you can get blown out pretty quickly as well. You know, and typically we try to shy away from the first 5 minutes to avoid all that noise. But sure, you can hit the pattern if the pattern is forming in that time frame. You're just going to be taking a lot more risk in that opening 5-minute volley.
Exactly. Well, here's a good example. You know, this run, it looked beautiful this morning. Okay, although no real earnings. I don't know if it was news or why it was gapping up so much, but obviously there was probably news. The earnings are not till February 27th. And you know, if you chase this one in the first few minutes of the day, you probably got whacked pretty good. But then on the second hand, you know, Mondelez, if you grab that one in the first 5 minutes, you did great. What's the difference? Well, Mondelez was trading off of earnings, okay, and it was a gap and go because it was an all-time high, breaking right through this all-time high. So I'm not going to say never trade the first you know, 15 or 20 minutes because I do know traders that are good at it. Usually they've been trading for a long time and they got a good feel of which ones are going to continue. But you know, even if you don't grab this, which honestly you're probably going to get you know, around a 56 entry or something like this in the first 15 minutes. Okay, you're probably so let's say you wait and you pay $1 more Yeah, it sucks, but you're still up at, $1.67 on the trade. I guess it depends on if you're, what kind of trading. If you're scalping, doing micro scalping, if you're getting in and out real quick, yeah, you could probably afford to jump in them early if you're going to just keep it real tight and get out of them. But you just got to be careful because they can, in the first few minutes, they can be really, really nasty. And I've seen a lot of people blowing up trying to trade those first few seconds, few minutes of the day.
And he was asking, or Uriel was asking, can that be done automatically? Well, yes, it can be done automatically through Brokerage Plus. Now, would the results be favorable? That's a whole other question. Right. And trust me,
yeah,
I've been down that road before. I've launched all kinds of strategies on the open, and the market used to be conducive for that, but it has not been in a very long time because, let's say you were running something like that in automation, and the signal came out at, let's just say, pick something at random, $30. It was a long. Even with an automated entry through Brokerage Plus, signal price comes out at 30. Maybe by the time your order got out there and you bought it, you paid 30 and a quarter. That's some pretty significant slippage there. Okay.
Yep.
And typically, if you're doing things like that, you're running off of a back test and you're putting the numbers that the back test generates out there as far as expectations on what you can expect to make. And when you start bringing in massive slippage like that in the first 5 minutes, a lot of strategies just implode on themselves. So yes, it does look alluring in hindsight, but interacting in that environment in real time is a completely different story.
Yeah, and here's the problem. You're going up against the huge brokers or huge HFT firms that have co-located computers right next to the exchange. If you're doing market orders, they're just going to rape you. And if you're not, you're probably not going to get filled unless it's going to go against you. And because Jamie and I have both been there, you're not going to beat the high frequency traders. Maybe if you bought it in pre-market, that would be a different, if you have a really good feel which direction it's going to go. But I'll tell you this, there's a lot more people that get blown out of the market trying to play the early minutes versus the ones that make it, for sure. And I would say probably 95 to 5%, 95 of them probably end up blowing up. It's a tough racket. All right. So that is the bounce below 50 SMA. I'll take that. Thank you. Okay, this was designed for stocks that have had a nice move in the last 20 days. They have to be up at least, let's just take a look at this one real quick. They have to be up at least 20 or 10%. You're welcome, Uriel. In the last 20 days. But today they have to be down at least 1%, and I still haven't changed this to the 10-period moving average. I still have a kind of a workaround, but this works. They're pulling back to the 10-period moving average. So let's take a look at some of these that came through. Not too many today, but ENPH. Let's take a look at this one and see what we see. This one was right at the bell this morning on the gap down. Gapped right down to its 10-period moving average. You got an alert here and had a nice pop. Let's try to find some that later on in the day, like this BLL. There's a good one. Look at here. Okay, here's the daily. Stock has been up nicely in the last 20 days. This morning we got the alert. By the time you pulled it up, you probably could have gotten in this bar, around 70, 71. Look at that nice little bounce in BLL today. Okay, at 9:06, 36 minutes after the market opened, we got an alert in MNTA, and it was at 29.15, so we got it right here. And you can see that I should be getting an arrow here pretty soon. My country internet's acting up. But anyway, it went in this candle right here, and once again, this one was just below or fell below another 25 cents. But keep in mind, by the time you see this alert and pull it up, you can actually get a much better feel. All right, so you can see this one. What you're doing, you're taking advantage. You're being a contrarian here. People are coughing up their shares for whatever reason, and you are getting alerted in it in real time. Look at this on the daily, hitting its 10-period moving average. Right there, we got the alert at 57.02, right here at the bottom. Very, very bottom, we got alerted to this. Nice bounce there. So, as you can see, now, you got to be careful. Had the market continued to tank today, like a lot of people thought it was going to, you might be wrong, okay? These can be great little entries, but if you're wrong, you need to get out. If that 10 period's not going to hold, it could bleed down, you know, a lot further. So this can be a really nice little contrarian play. Now, I say I like it for swing trading. This one is one that can definitely be used for day trading. I guess all of them can be used for day trading, but this one can also be a great little swing trading vehicle as well. And a stock that I'm in that didn't bounce today is this SDC. Caught it at 13.25, so did catch the bottom down here in this SDC off the 10-period moving average, but really never bounced, probably because I'm in it. But all right. Now, let me make sure I don't have any more questions. I am going to, oh, he left. All right. Random act of violence. This is just to make it easier for you guys. These are stocks that have a pretty good score. Now you're going to see composite rating of 79, and you're going to see some in the 70s, and you're going to be thinking, well, that's not a great score. Well, it's not, but it's not a bad score either, okay? Especially in a market that's pulling back, because a lot of these, most of the metrics are technical. So if the whole market's pulling back and these are pulling back, their composite rating is going to suffer. Okay, these react in real time. It's not like some other ones out there where you know, the market could be in free fall and they're going to keep 100 on their composite rating just because they like the fundamental of the stock. No, we're going to let you know when they're breaking down with our composite rating. But what happens is once these things get down 2.5%, you can see this RNCC. And Jamie, I can't figure out why in the heck I'm not getting this is I'm on a new dev version, but I don't know why I'm not getting an arrow on my intraday chart. But
yes,
anyway, I'll look at the end of that
that's
later.
Been an issue that I had the past couple of days. I just upgraded to the latest version. I don't know if it's still present, but yeah, it's been a little sticky here lately.
Yeah, seeing that. Let's take a look at another one. These have to be down 2.5%. Okay, so they got a good. It's very simple. Three big metrics here are the composite rating. They have to be down 2.5%, and it has to be. It cannot be on high volume. In other words, I think I set the max relative volume at 2. I don't want to have things on earnings coming through doing 5 times normal volume and jump in front of that bus. You know, they're selling off for a reason, but a lot of these things you're going to see are selling off on low volume. And there, now see, I got one on that one as soon as I clicked on it. That's weird. There it is. So this one right here went off. This was late in the day, but maybe it's one I watch tomorrow if it can hold this 50. Maybe just put a little alert up here somewhere. Yeah, it's a biotech. I don't know if I want to play that. Let's see if we can find some this morning coming through. No, I got to expand my time window. Oh, never mind. There were a lot coming through. Obviously, with the market that we had today, you're going to find a lot coming through when the market's down as much as it was. And you can see here, look at MEET. Remember that was coming up over here? Well, you could have got this morning. Yeah, there it goes. It's not showing me on this one. At 535. And that would have been a little bit too quick probably. But I think it finally bounced. All right. So let me do this. I have this. What I'm going to do is anybody who has our software right now are going to be able to take this. I'm going to share it with them. Okay, so I'm gonna go to my cloud and I'm gonna find it because I saved it in the cloud so I can share it with you guys. It's gonna call a swing layout and then I have a date on it. And I'm just copying the code right here. And now I can go drop the code in the chat window, and anybody that has our software, I'll just call it Andy's swing layout, will have access to this whole layout, all the windows. And once again, if you don't have the software yet, you're signed up for the test drive, just email info at, Scott will show you this too as we're heading out, info@trade-ideas.com when you do get access, and I will share this code with you, and you can have access to it. All right. I want to talk real quick, guys, about the anchor VWAP. So let me bring up another chart, and real quickly here, we'll bring up this chart right here. And when you have an event, is the best time to use this. Let's take Apple, for example. And let's put this on a 15-minute chart. Let's say you're a day trader and you want to look at Apple on a 15-minute chart. Here we had the gap up off of earnings. And let's say you want to draw an anchored VWAP. Okay, so what is an anchored VWAP? Basically, it's telling you the average price from a certain anchor. Okay, and once again, the anchor needs to be an event, whether it's an earnings, a big news item, where there's a gap or something like that. So in this case, we had earnings for Apple on this day right here. So I could go like this and click on my anchor. All right, draws an arrow. I can come down to this candle, and what it's going to do, it's going to set the anchor at the close of whatever candle you click in. So there you have it. And look at there, Jamie. Here's the anchor VWAP. Okay, right here, going back to this close on this day right here, they had earnings, and look what happened today. It rallied right into that anchored VWAP.
Yeah, that's going to be an interesting tool.
Funny.
I'm looking forward to using that a lot.
Yeah, and this works on the daily as well. So I could take this time frame and put it on the daily and do the same thing. I could take it back to the beginning of the year, which would be right. Is this the first? I always go back too far. Okay, so this is the beginning of the year right there. I can put it right there as well, and on a daily time frame, and you can see there is the anchored VWAP from the beginning of the year. So Apple has been on a run, well above its average weighted value price. I think I probably butchered that, but that's all right. You know what I mean. So anyway, guys, it's really easy to use too. I mean, all you got to do is click on the anchor, click on a candle. It takes the Brian Shannon uses this. If you hover over it, you're going to see it says Alpha Trends Anchored VWAP. So let's see. David says, where does the non-anchored VWAP begin? Well, it depends, I guess, the time frame you're using, David. You could do that. You could do that on an intraday. And I think it probably uses, if you're using on an intraday, probably the close of the previous day. I don't know, Jamie, do you know that one?
Let's see, the non-anchored VWAP.
I think it would probably just use. I don't know. Obviously, if you don't have an anchor, okay, then it's just a time frame.
It's
so
just
that would be
on a daily basis, it's where the majority of the price action has occurred, right?
Right.
Mm-hmm.
Right. So what's value weighted average price? Is that what it stands for?
Volume weighted average.
Volume weighted. That's right. Volume
it's kind of like the
That's
institutional guys, get graded on that.
Right.
So it's just where the majority of the volume has changed hands.
Yeah. All right. So we got 1 minute left, and you guys will have access to this. Play around with it. It's a neat little tool. Meanwhile, we are at the top of the hour here. Thanks so much for everybody who participated today, or if you just listen, thanks too. And I'll bring Scott back in here, and we'll walk us out, and he'll tell you more about the test drive.
All right. Yeah. Thank you. So test drive starts Monday, but if you sign up before then, we are turning on access tomorrow morning. Saturday morning, to give a couple extra days to those people that sign up early to get used to the new parts of the software they might not be familiar with, or if they're new to Trade Ideas altogether, they can start playing around with it and getting ready to start bright and early Monday morning. Signing up before Monday ensures you're going to get the full 2 weeks. Just go to trade-ideas.com/test drive and learn more about how to sign up to get 2 weeks of all premium access. We have special webinars, special support. You get to try out the AI, the simulated trading, all of our features, including back testing. So don't miss out. The last one was super popular. We're already on track to have more signups for this than we had for the last one, so we're excited about that. We can't wait to see you all in the trading room and at the webinars next week. So don't miss out. We also got some ebooks. If you haven't gotten these yet, might as well download them before the test drive starts and start to apply some of these concepts next week. We have access to all the premium features of the software while you're in the test drive. Just go to trade-ideas.com/setup, and you can find out how to download these books. There's 3 books. Each one's got a couple of chapters. Andy and Jamie both contributed to those chapters. There are also cloud links, so you can add some of these concepts to your layouts and try them out in real time next week. We got a podcast. We just actually released a new interview episode, so you can search for that. You search for Trade Ideas Podcast, add that to your subscription. And our last 2 episodes have both been interview episodes. The current one is an interview with our CTO about the new anchored VWAP and new chart features, so don't miss it. We've got a code for discount if you decide you want to just go ahead and activate today. Simulate is the code that's good for the remainder of this month. This will be good until this time next week. It takes 15% off the first month or year of any Trade Ideas subscription or upgrade from standard to premium. If you have any questions, email us, info@trade-ideas.com. That's the best place to send any questions because it goes into our help desk software. That way the email doesn't get lost in someone's inbox. It just goes into the help desk software and is routed to the appropriate team member who's available to answer your question most efficiently and thoroughly. So use that. You can also follow Jamie on Twitter @QuantBot. Steve Gomez is @TodayTrader. We also have @TradeIdeas. And Trade Ideas Pro is the Facebook handle to follow on Facebook and share our stuff with your friends. Thanks, everyone. We'll have this recording up later on tonight or by tomorrow morning. And we'll send you an email tomorrow from GoToWebinar with a link to the playlist where you can find it. Thanks, Andy. Thanks, Jamie. Have a good one.
Yep. See everybody
Thanks,
at the
guys.
Friday
See you.
session.
All right. Bye-bye.
Bye.